How to do MCX trading. Trading orders, which in terms is the buy and sell, can originate from all the possible sources, would then be channeled directly into the trading arenas, which means that this would be the place that most of the prices of these commodities would then be determined, and thus investment choices would be made. In the end of the trading day, this is where the orders are then converted into purchases all over the world and sales in the buy and sell environment. One of the major functions of trading futures is the actual transfer and movement of risk. There is an increase of liquidity in between investors and traders who, of course, based on their individual preferences, would have different time preferences. Trading futures is a tool that most investors use to completely do away with the risks that naturally occur when there are price and market fluctuations. While this is a way to remove the unpredictability of the price and market movements, futures are not 100% guarantees. Basically, in the market there would be two main and major groups of futures traders. One of them is the hedgers, who are more intrigued in low-lying commodities and are looking to, in a sense, hedge out the risk when it comes to price changes in the market. There are also the speculators, who make up a large part of the market when it comes to trading futures. They will try to buy a commodity in the hope that whatever system they have in place will be able to predict by buying a commodity on paper, in the hope that the price will change in the future. When you hedge, you are protected against major fluctuations in the prices on the market, and this is done actually by allowing the risks of these changes to be moved to the arenas of the risk takers of the market. While this article will not get into the nitty-gritty of hedging futures, just know that there are two types of hedgers, which include the sale and the purchase. You might believe that this is laying a bit, but the piece of information is that conjecture refers to the state of a rightful venture based on the present state of the marketplace trends. On the other hand, it is very dangerous for green future stewards who try to forecast the marketplace and wonder without having sufficient capital or knowledge. Given that the prices are dispersed through telecommunications net and cyberspace, it creates online futures brokering very expedient and straightforward for a person. These days, a lot of agents proffer their provisions for trading commodity futures on the internet. Since additional danger is concerned in online futures trading when compared to stock trading, you have to critique for yourself whether or not it merits the additional jeopardy of trading commodity futures on cyberspace. These are some of the things you need to understand when looking at trading futures offline or online.